Hi guys, how are you doing? Welcome back to my channel. Coming into today's video, I'm looking at Eurocard and I want us to do some analysis on the Eurocard. I know I never give you the first analysis about the selling of the Eurocard, but I did the result of the Eurocard. So we have a chance on the Eurocard. Let's see what will happen in this market because the last time I was early this week when I was checking Eurocard, it was selling, and again it is in this spot where I feel like we can have another chance of entering the market. That is buying the market. Let me go to 4 hours so that you can try to understand. No, let me just start with the daily time frame. You can see this market has been ranging, and a ranging market is quite easy to trade because you only need to know where the market is. Is the market at support or is the market at resistance? And in this case, when you are selling the market was already at resistance. Resistance is where the market, whenever the buyers push the market, the sellers are pushing the market down. Like you can see this market, it is in form of can say a W, zigzag, M, whatever you want to call it, but this is how the market looks like. Whenever the buyers push the market up, the sellers will push the market toward the downside. And if you're not comfortable trading this type of a market, the only thing that you have to do, you just have to let uh, either the buyers break on the upper side, then you can continue buying the market. If you're not comfortable again, then you just have again to wait for this market, wait for the sellers to break toward the downside, then you can sell this market. The day the sellers are coming down, then you can just have to wait. The day the sellers will break either the toward the downside, then you can sell the market. But now remember, this market, this is a daily time frame, so each and every candle here represent a whole day, meaning that if you are to wait for this market, if ever you started waiting for this market to break toward the upside, you can see this, the buyers failed to break this market, the sellers took control. You can see with this long wick here, and they have been pushing the market downward again. Buyers came in, they pushed the market, sellers failed to break again. This is the cycle the market has been behaving. And when I look at the overall direction, you can see this market again. Yes, it has been buying, but saying the market has been buying, it doesn't mean how the market will continue buying. That is why we have some types of ranging market. As much as we know the market has been bullish, the market has been buying for quite a long period of time. If you can just squeeze the chart, you can see the market has been uh, quite bullish. The market is not heading down, it is heading toward the upside. So going to 4 hour, the reason why we are selling the market, and now to give you why we want to start buying the market, so that you can just see the same thing that happened is what we are going to repeat. Okay, when you come to the 4 hour, let me remove this box. When you come to the 4 hour, so the moment the buyers pushed the market toward the upside, you can see how the buyers were pushing the market toward this upside. This is the 4 hour. You can just go and check this market, because we said we will not be backtesting a market that has already happened more than 2-3 years ago. We want to do a live current market, so that we can just do a follow up and learn from our mistake. You can see this market, when the buyers were pushing this market toward the upside, let me make the chart even bigger. The sellers came in, and you can see they created a simple chart, a simple pattern, whatever you want to call it. So many people, they call it a double top, or you can call it an M, because it resembles an M. And when they came here, we are told to wait for the neckline to break. Then after the retest, you can see the movement of the market. But again, remember, we had the US election. That is where the market has been moving that fast, because you can see how the market took so many hours to reach this point, and it is only 200 pips for the market from here. 200 and something, 200, around how many pips? 260 something. Let's just say 200 pips for the market, for the buyers to reach here. But you can see the types of candles that were printed. Only 4 hours candle. How many? Like 3 hour candles. 4 hour candles. You can see how the market had already gone, already the 200 pips, meaning because of the US election. So First, the reason why we are selling the market so that we can replicate the same thing. The reason why we are selling the market it is because we had this double top, or you can call it again the M, whatever you want to call it. And now this was an area where we wanted the market to break for us to be sure that the market want to continue pushing, because we are told you have to wait for the neckline to break. And if you go to the lower time frame, of course you'll see the market had already gone down. And if you entered the market, you can just go and see the whole of that video, the reason for entering the market. But at the end of the day, you can see the sellers came in and they pushed the market toward the downside. Let me go to 1 hour so that you can see even the entry. I've already done this video, you can just go and watch it, the reason behind the entries in the red candle and all that. But now we want to find a way if we can now start buying the market, because that is the reason why we were selling the market. Remember, we have a double top here. The buyers try to push the market the first time and the second time. And remember, from the previous data, you can see the same zone. Whenever the buyers try to push the market down, you can see how the movement of the sellers, how the sellers come in and gaining a lot of momentum. So you can see, we can just say we have a lot of demand, supply, all that you can just combine, because at the end of the day it is still the same thing. So now, since we were selling the market, it is time for us to buy the market. The same thing we were doing here. Step number one for us now to start thinking of buying this market, we want to see that by the end of the week, or even by the end of the day, we don't want to see sellers gaining momentum and pushing this market toward the downside like this. We don't want to see the sellers continue gaining power like this. You know, the market will keep on saying will never go on a straight line. We don't want to see the sellers gaining power and breaking toward the downside. We have to use the higher time frame, that is the daily and even the weekly, to know how the market is reacting. From there, if we don't find sellers gaining momentum, we want to see the buyers starting to come in. If we ever see the buyers starting to come in, then we will go to the lower time frame. Then we can use simple patterns like the inverted head and shoulder, where we have these types of pattern showing us that the buyers, it is a good pattern for reversal, using this type of a pattern. Or even again, you can use this pattern again. We call it, when you are selling, you are using a double top, but now when you want to buy the market, when you want to buy the market, we want to use a pattern like the double bottom. Remember, we were using this, we were using M, right, like this one. But since you want to buy the market, now we want to use the opposite, that is a W. You can call it a double bottom, you can call it a W, but it is the same thing. The same way we were selling, now we want to apply that knowledge to start buying the market, because if the sellers won't break toward the downside, then it is our chance now to reverse. Like, we want to do the same thing. I don't know if you can understand what I'm trying to say, but we will do the same thing. But you have to be patient. I'm just trying to think if ever we can get an entry, if ever this market, at least it can come around this area. They fail to break, then we can start again buying the market. But it doesn't mean that it will move as fast as it did during the election. But at least we have an idea of what will happen in the market. So you have a chart to go and look at and see if ever you'll find a chance. Because at the end of the day, we just want to have an entry where we can enter the market and we leave the market be. Because I keep on saying, it is our work to always find a chart that we have to analyze, then you let the market be. Let me add this line here. It is our work to look at the chart, then after analyzing the chart, if ever all the analysis align with our strategy, then it is our chance to enter the market and let the chart be. So go and look at Eurocard. In case you get an entry, this is my thinking. We can buy the market for around 200 pips. Even if we get 100 or even 150 pips, we are still good to go. But for now, go and look at Eurocard, add it to your watch list, and see if ever the market will buy. But remember, in case this market again it breaks toward the downside, I've said you just let the market come back, create a new lower high, then you can start selling the market. But because I don't want to say you have to wait for the box to break toward the upside, because we are already on the downside, so let the market watch out on what will happen around this zone, because the market around this support, you can see how many times it has been tapped. So it is quite a good market. So it is a rangy, but you cannot trade inside. You have to wait for at least the sellers to come here, and you see buyers getting into the market, then you can consider starting to buy the market. So go and watch it on Eurocard, and maybe after 2-3 days or even after a week, we come back and review how the market have been doing. So until next time, bye bye.